But otherwise, what are you learning on some of these conference calls, which I know you're on every single one of them, and speaking to investor relations departments about the outlook, which is questionable with some of these companies, and you're really seeing it in the share price reactions of those that are missing, getting punished.
For sure. By the way, I loved your Zoetis call and interview. That was great, and I'm really looking forward to hearing what IBM has to say. Lots of questions there, but a lot of great things happening at that company. I think the one thing that we learned, or I learned this week on the economic front, is that October actually did rebound from September. Obviously, as COVID cases started to roll over. And we saw ISM services at records. We saw factory orders and durable goods, ex-transportation that beat expectations. The job numbers are coming in better than expected. ADP, really good numbers there. 10 straight months of growth. Initial claims, you're back to March of 2020 levels. And I'm looking at like companies like Booking Holdings, like Match Group. These companies are saying that mid-September and onward into October, they really saw demand pick up substantially. So that's encouraging, very much so. So with all this growth, you do have inflation. Obviously, we've been talking about it for a while. Not happy with unit labor costs today at 8.3%. Annualized. And if you listen to what the Dallas Fed is saying, they're expecting 6% rent growth in 2023. Those are the two pieces of inflation that I'm watching because I don't think they're as transitory. But when you have better growth in inflation, shouldn't be a surprise. The Fed should taper. We don't need emergency stimulus, so I'm glad that they are starting, and we'll see how that goes. And in the meantime, earnings are growing 37.1%. And numbers are going higher, and revisions are going higher, which is very encouraging. So strong economy, good earning, seasonal strength. I think you stay long in this market.